Hello everyone. It's MarketWizard here. For those who don't know me from X, I'm a full-time crypto trader. I share my market thoughts on X and run a private Discord with daily analysis, trading ideas, trading signals, and education. In this video, we're breaking the chart down from high time frames to low time frames and preparing for what could be the early stages of a bear market. So let's dive right into it with the high time frame chart. This is the weekly time frame, as you can see, and I'd like to start with my bearish thesis. I'll share a few points and then break it down into smaller time frames. So I'd like to start with the weekly SFPs. So let's start with what an SFP is first. An SFP happens when the price sweeps a prior high or a prior low and fails to hold above or below it and then closes back inside the previous range. And here we can see multiple examples of it. Here is from the 2021 market cycle top. We had a high here and then a sweep of the high here and rejection back into the range again. This is a bearish SFP. And here you can see a bullish SFP. We have the low here, then a sweep of the lows and another sweep here. So this marked the local bottom, which led to 2x before having another SFP and then the beginning of the bear market. Here we have an occasion where we did not sweep the lows, and then that led to a more aggressive sell-off. It's a similar structure that we have right here, where we have the low, but we did not sweep any of the prior lows so far. Same thing here, as you can see. I'm not sure if we're gonna have this kind of downtrend afterwards, but this is something to keep in mind. Then we have more SFPs, as you can see, on every bottom and every top. Another one here and here and here, and we have two here. So all in all, this is a very high time frame indicator for spotting the market tops and bottoms. This is the first point that I had to discuss, and then I'm going into the next one, which is the 50 weekly moving average. This indicator separates the bear markets from the bull markets on the Bitcoin chart. And you can see this historically, that whenever price is trading above it, we are in a bull market, and whenever it's trading below it, we are in a bear market. Obviously, this is a lagging indicator. This is not going to give you the exact top and bottom as the SFP does. But still, it's a nice confluence to have, because it's good to have both lagging indicators and more immediate indicators like the SFP. So that adds to the confluence of the bigger picture. So we can see an example here where the price was supported by the 50 weekly moving average and then rejected by it. That led to a further downside right here. Then we can see another push up when it flipped the weekly moving average. Here we have a lot of choppy action after we have the COVID crash, so it's a bit hard to spot it here. Then we have another example here of the support here, and then a rejection, the bearish retest here on the 2022, which is something we are seeing here. So during the bull run of the Bitcoin chart, we can see that as soon as price flipped the 50 weekly moving average, we haven't traded below it from March 23 until November 25. And currently we almost retested that last week. So this was the second point that I wanted to talk about. And then next one is the 200 weekly moving average. So I usually use this indicator on a very high time frame chart to spot the macro bottoms of the Bitcoin chart. As you can see here, one in 2015, one in 2019, another one in 2020 with a small deviation here because of the COVID crash. The only time that this deviated a lot more was in 2022. But still, even if you bought spot here at 22K, you would still be up 6x in the next 3 years. So it's a pretty decent return. So currently the 200 weekly MA is sitting at 58K. So this is going to continue to go up as the time goes by. So I believe will be around 70K by the summer. So this is another indicator that I'm going to use to spot the bottom. And let's move on with the third one is the weekly RSI. It's been, this level has been acting as support for this whole run up, which is the 45 level of the weekly RSI. As you can see here, 45 level acted as support. We move upwards. Then we come here, we retest it, boom, up again, here, bottom, retest again, and then up. Now we are retesting it from the underneath, which is a bearish sign. So this was the third point that I wanted to talk about, the bearish thesis that I am currently looking at. And let's move on the fourth one. This is the fourth one. It's the so as I discussed earlier, every major bottom or top on the Bitcoin chart is formed by sweeping the lows or the tops. The only time that we didn't see that was in 2022. We had this bear flag here, which is a pretty similar setup that we currently have. You can call this bear flag, a rising wedge, whatever you want to call it. And well, you can see that usually Bitcoin bottoms on the exact opposite pattern, which is the falling wedge. You can see one here. You can see another one here if you go on smaller time frames. Let's go on the daily. Here you go. So this is the exact opposite. This is a bearish pattern, and this was the fourth point that I wanted to talk about. Let's move on to the next one, which is the horizontal resistance that we have here on around 100K and 104K, 104. So I was expecting Bitcoin to push a little bit higher before rolling over, but since we got rejected back into the range, I have to treat this as a deviation. Unfortunately, here we are. This is our range. So I have to treat this as a deviation for now. I'm not saying that it cannot still go higher, like, and top around here and then move lower. But these lows will definitely get swept at some point, because they always do. And that's where I'm willing to add into swing long positions. If we sweep these lows like this and we manage to reclaim the range and push upwards, this here, this is where I'm willing to add into spot and swing longs. But unless this happens, I'm not willing to touch any longs or spot positions right now, because this is really looking like it's done for now. Here it is. Let's see what else do we have. Back into the weekly time frame. We had that 50 weekly moving average, as I showed you before, here, along with the horizontal resistance. That's a pretty heavy supply zone. If we are indeed in a bear trend, I don't think Bitcoin is going to pass through this unless we sweep the lows first. What else do we have? Let's move into smaller time frames. As I showed you earlier, this is our range. Got the deviation here. If this was whenever Bitcoin starts a new uptrend, it does not allow deep pullbacks. It usually goes vertically, does some vertical accumulations, and it has small and shallow pullbacks. And this, so I cannot treat this as a breakout. This is definitely a fake out for now. So we have these lows that were never swept, expecting this to get swept at some point in 2026. And then we have to take it level by level, because we have more lows that could be swept here at 75K. So either here or here we'll definitely see a strong reaction, where I'm willing to add into swing long positions and spot as well. If not, none of these hold. Here, this is where I'm expecting to have a strong reaction, something like this. And then we see how it goes. If this doesn't hold, then bad news for everyone, because then we're looking into these big range here, which was trading, Bitcoin was trading in this range for almost a year. So if we fall back into this range, it will take a lot of time to form a base here before the new bull run starts. But I don't think we're going any lower. I have these as the lowest price for 2026, which is 50K. But it's too early to call for that. I'll take it level by level. So for now, I'm aiming for somewhere in 80 and 70K to begin with. This is my point of interest for swing positions into the long side. Let's move on to Ethereum. So Ethereum, let's draw the range here. Here we have the range highs, and here we have the range lows. It's been trading here for 2 years. And we also have this mid-range here, which acts as a very crucial pivot point. So sometimes it acts as support, as you can see here. Sometimes adds resistance, and then again resistance here as well. Now it's acting as support, but again we still have unswept lows like Bitcoin. So if Bitcoin goes back to 80K, I'm expecting Ethereum to go much lower this time. Probably range lows around 2.2, 2.1K. And that's again where I'm planning to add to swing positions. Another interesting thing I'd like to discuss is the S&P 500, which currently looks like the momentum is failing here. As you can see, this rising wedge, we had this breakaway gap while the market is closed due to public holidays on the US. And I'm thinking maybe something to do with Trump's headlines soon, because price usually leads and narrative follows. So this could be something to do with the tariffs that Trump is announcing, or something to do with the wars that he's taking part of. He's being a bit cocky lately. So let's see how this plays out. But see, if this starts correcting, there is a lot of downside potential here. 10 to 15% easy. Imagine how crypto reacts to that. On the positive side, though, back in April, Bitcoin started the downtrend a lot earlier than S&P 500 did. So if you see here, S&P started falling in March until April, while Bitcoin was already at the lows when S&P 500 started falling. So maybe this could be the same. Who knows? But we need to see the headlines first, because something is cooking here for sure. See, range highs, breakout, fake breakout once again, and back into the range. Not good, obviously. What else about Ethereum? On the low time frames, here we have a clear resistance at 3.4, 3.5K. Not expecting any upside unless this is flipped. Something like this. But again, the upside is limited. 3.8K to 4K, and then down again. But for this to happen, Bitcoin needs to go higher before lower. So if it does something like 100K and then down, then maybe ETH could do something like this. But this is not my base case. We need to sweep those lows at some point this year and maybe lower. So that's all from me for today. If you liked my video, follow me on Twitter for more trading ideas and content, and feel free to reach out to me. I'll put all the relevant links in the description below, and I'll catch you next time. Bye bye.